Rohr here with an early global view on Thursday, December 4th, 2014. It's currently 5:45 a.m. We're coming to you early today because we want this analysis complete and posted well ahead of the ECB press conference commencement at 7:30 a.m. U.S. Central Time this morning. So the question is, what does this mean to the markets? And even though this is a global view today, it can be fairly concise in terms of a lot of markets are already following through on considerations that we had noted previous. And in the case of the U.S. S&P 500, here are short-term charts, classically the hourly on the left, 30-minute on the right with indicators below. And this is all set up for a further significant decision out of today into tomorrow, because we had noted that the major weekly topping line was up at the 2075 level this week, and lo and behold, look where the market got back up to yesterday, which also seemingly negated, after the previous highs around 2073, 2072.5, 73, the downward break from last week, Friday, that was, again, the initial weakness before Monday's sell-off. And it's very important as to whether the market weakens again a bit early today in regular trading hours or manages to push straight above that 2075 level, which is such an important level for the overall consideration where this trend can accelerate. Because if it escapes, because it's out on oscillator resistance as well, there's not much till up at 2100 area. So that's important. And you will just note that if it should set back first, the previous support down and around the 2063 to 62 area has been reinstated on overrunning this gap once again. And also that the market had held Monday with only some modest slippage below the 2052 gap going back to 2 weeks ago, Thursday into Friday, on the significant Bank of China easing. And the other important factor right now is that we have worked ourselves back up to right against the upper runaway band on the hourly MACD. If this market should push up above 2075 today and feed on itself at all, it's going to start to encourage that runaway that could extend for quite a ways. So it's going to be very important how the market responds to the ECB today, even in front of the U.S. employment tomorrow. And that pretty much does it for the short-term view of the S&P 500.